I can say that the last week was particularly good for GBP dollar, for AUD pairs. It was not so good for dollar, but all other pairs went perfectly in profit. And even to everyone, even to Bob, to all of you who are new and all of you who are old, all the attendees of this and experienced attendees of session recaps. So I hope that these setups will make nice profits during this week. Before I begin, as always, standard is disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Okay. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice, and it's a personal opinion only, and this webinar is for informational and educational purposes only. So with having said that, we are ready to proceed. Okay. For all newcomers, a quick disclaimer about these setups. So all session recap, trades, and analysis are done with Camarilla MACD. So all of these setups and trade analysis is particularly done with Camarilla MACD, and Camarilla MACD is my proprietary method. The main principles are basically stated here. First of all, we need to give price a breathing room. Okay. We usually enter within 5 to 10 pips of the predicted level if it's in agreement with the system. Of course, I use these recap entries for my trades because obviously they're Camarilla MACD, and of course I trade it. But if you, for I don't know any reason, trade of course other system, other method, other kinds of Forex trading systems, then what I suggest is usually that you enter within 5 to 10 pips of the predicted level if it's in agreement. So 5 to 10 pips is a breathing room. Usually it's 10 pip buffer for a breathing room. But you know, if you're doing pending orders, then what I would do, I would usually place pending order something at the exact spot. But if I do market order, then you know I'm watching price action, and I can basically enter within 5 to 10 pips of the level. Okay. Because market is not perfect, and you have heard probably about all of those manipulations in Forex market, particularly last week, last month, last couple of months. There were some banks were fined for their behavior, and that's not ethical behavior. Basically, they were manipulating the price around London fix. I currently am writing an article about Forex manipulations, and those manipulations, you need to know, they're not done by our brokers. They're done by big banks, okay? And I will write an article. I have many examples, and that is 100% true, what I will be saying. And definitely I don't like those kind of things, and I think that sanctions for them should be pretty much huge. Okay, and they should be always fined when they do things like that, because you know what happens, and what happened many times, that I was right about price action, but because of those manipulations I lost a couple of trades, only that those trades later became winners, and I don't like, and no one likes that. And there are many examples, and I will really make an article. It's in the process. and you should read it. And you probably saw the price is going nicely and then spikes down, killing your stop loss, spikes down, killing another stop loss just to go in profit later. And those kind of things do happen. The question is, do I take real account trades on Mondays? I only take real account trades, really. Only real account trades. I don't do demo account. The only demo account I have is this, where I show you these recaps, of course. And the demo account is also in a profit. I started with $10,000. Now it's something like 11,700 and something like that. But I usually practice also because I have my Camarilla MACD method, and sometimes when I make slight changes to those levels and to entry methods, I first need to test it, of course, on demo account before I do live. But I don't trade demo accounts, only live accounts, and that is what I do, even on Mondays. Today I had some good trades. But as I say, I just don't like when I'm okay with losses, and every one of you should be okay with your losses. But the thing which nerves me and which really is getting on my nerves is those big bank manipulations which are basically killing your good positions. So that is why I always say use trailing stop, use stop loss, don't trade heavy, don't use heavy positions. Go slowly, okay? You always respect your stop loss. We take one position, usually position whichever hits first. Position trade or alternative trade, not both positions. Position trade is usually trend trade position, so it's a trend trade position. Alternative trade position is counter trend position. If you're buying at the spread, that's the primary rule of trading, especially if you're making pending orders. If you want, let's say, if you want to buy pending order, GBP dollar at 63.50 and your spread is 2 pips, then you need to place your pending order at 63.52, right? Because you have 2 pip of a spread. If you're selling, you don't add the spread to your entry. You add the spread to your stop loss. Selling, for example, GBP dollar at 63.25, its stop loss is 63.55. So if the spread is 2 pips, then your stop loss is 63.57. But usually I even do that and leave stop loss fixed at 30. Sometimes if I see that the trade can be really good, I can, and my stop loss is 35, then okay, I will enter with stop loss of 35, but instead of, let's say, trading 0.5, I would trade 0.45 or 0.40. So you always, remember, you always base your trades according to your stop loss, your entries. Your entries are never and should never be based on, let's say, how much you're willing to risk, how much you're willing to gain. It's okay, you will make profit, but you need how much you're willing to risk. Your risk potential is defining your volume traded. So let's say if your overall risk is 0.5%, and you can take a 30 pip stop loss with one full lot, which is effectively giving you 0.5% risk, then do it. If you're having $10,000 account and you want to risk 0.5 within those 30, 50 pips, it doesn't matter. You can risk 100 pips and still be in that 0.5 risk. So just lower your entry. You won't be trading with one lot. You won't be trading with 0.5. You'll be trading at 0.3, 0.2. If you're making 100 pip stop loss, then 0.1, because your risk will be 1% then. That is what you need to do. You need to remember that. If you don't do it, as I suggest you, you will never become profitable in the long run. Because I know from my experience, you can have 3, 5, 6 winning months. And all of those months you were risking 0.3, 0.5%. And then you make a single trade with 5% of a risk. And what if it hits your stop loss? Then you will kill 2 profitable months of trading. Okay? That is what I'm suggesting you to do. Sometimes I know you're tempted to take some of those very high probability trades with bigger risk. But then still, please do that only, for example, you made 12% of a profit. Try to put that risk into that profit. Don't risk your equity. Try to put the risk inside the profit you have made in the last couple of months. That is when you can do high risk trades. But if you're starting fresh with a fresh account, you first need to raise it before you can take a little bit of high risk trades. But then remember, all of your high risk trades should fit into your profit zone. So into that 12, let's say, percent of profit. So then you can maybe take 1% of a risk per trade or 2%, but still the margin is not big, because your margin would be still, let's say, 12 to 6 losing trades to lose your profits, the overall profits. So try to fit in, try to estimate your stop loss and put your enter your entry according to your stop loss. Usage of trailing stop is highly recommended, just because of those manipulations which we are seeing every week. You need to basically use trailing stop. Recaps will help you to better understand the structure of the intraday trend. What does it mean? The structure of the intraday trend is how I present you. If I say, for example, position trade, then we will go with the trend. If I say alternative trade, then we will go with counter trend. And those counter trend trade entries can be pretty profitable. I will show you last week, as always, and both of counter trend positions were profitable. All of my analysis on Camarilla MACD is valid for today, tomorrow, and sometimes the day after tomorrow. That is why I use intraday trend lines in my analysis. And I can say that all of those setups can be valid for today, tomorrow, and the day after tomorrow, or the only exception is I make updates. Very occasionally I make updates on Twitter. You can also make, if you're following me on Twitter, that's good. If you're not following me, then do that. My Twitter handle is Tarantula FX, and you can follow my, of course, updates. I always post my analysis on Forex Factory, Spider's Den thread, Admiral Markets blog, that is automatically sent on Facebook page, and of course always, and Forex Street, yeah, I forgot Forex Street, and worldwide investment forums, but Forex Street is also posting my trades. So each time I make another analysis, it will be posted on Twitter instantly. Also, those updates are posted instantly. Pips pool is the maximum available number of pips you could have got on recap entries. Okay, so I use the term pips pool for the maximum available number of pips. Last recap results, 10th of November 2014. Euro dollar, we went with scalp trade, but eventually it went 90 pips in a profit. So I'm not saying that you probably didn't catch all of those 90 pips, but between 15 and 90 pips was good. GBP dollar hit our target for 50 pips, and subsequently it went 300 pips in a profit after it hit our target. AUD also was good. Aussie dollar, or so-called Aussie, plus 50 pips. Very good trade also. AUD CAD, great trade. I was telling you about this AUD CAD that you should take it, and I know that a couple of traders who are visiting this session recap took this trade, and it was good for 45 pips. It was high volatility setup, the same setup which I use on Camarilla MACD trading. High volatility candle, high volatility setup. You can find these webinars about high volatility candles on Admiral Markets and Forex Street. You can check Forex Street, it's easy. Just type Forex Street and Nenad Kerkez, and then you will find, just type Forex Street and my name, and then you will find those webinars. It's called high volatility webinar, and that is where I explain high volatility trading method. Okay, and that is very good method to trade, really. Dollar CAD minus 30 and dollar yen minus 30. Dollar CAD was live trade, live entry during our webinar, and unfortunately dollar CAD, well, it went some 5, 6, 10 pips in profit, and then it dropped, and basically it jumped and hit our stop loss. Also dollar yen, you know, dollar pairs pretty much strong, and because of that I didn't make any dollar analysis. Who knows, you know, tomorrow it will be important day for euro, and all of euro crosses will affect dollar crosses, so euro dollar especially. So we basically will stay away for dollar CAD and dollar yen for now, and we will trade other pairs which I find interesting. Of course, I just need to tell you, I hope that you have taken, guys, this one, AUD New Zealand. You remember my analysis, and look, if you have taken any of those entries here in this zone, now you would have made 100 pips. This setup was posted on Thursday, and I was also told you that we needed to wait for retracement. Retracement happened on Friday. I took this trade and I got some 40 pips because I left this trade to run over the weekend. It was so good, look, so good for trading. It hit our POC zone, these Fibonacci confluence zones, and then it went straight down, hitting basically our target and basically giving us even more profits. So I hope that you took this trade because it was particularly good. And that was the part of my standard analysis, which I do every day on Admiral Markets Forex Factory, Forex Street. So trade of the week is GBP dollar. It's 175 pips pool. So whichever number of pips you've taken is good, because you could have made 10 pips, 15 pips, up to 175 pips maximum total, because this was the pips pool for last cap results. Now let's go with the market plan. So yeah, I need to show you, before I do that, I will show you those. Sorry, I will put it like this. So euro dollar, this was the time of our webinar. I was suggesting sell around 25.20 with a stop loss of 25.50. It wasn't hit, but our other setup, which I was also, let me show you, just let me show you, find you that setup. It was such a recap of 10th. So here it was euro dollar setup, and this setup was particularly good. This was from last week, 10th of November. Let me put it here. So this was the setup which worked perfectly fine. Okay. Scalp swing 24.10, 15 pip trailing stop. Final target was, I forgot what the final target was. Yeah, 24.50. So actually it made a lot more. It made a lot more because I made a Twitter update that for any one of you who were in profit, please leave your profits running, because look at this, 24.10 here, 24.10 here, 8 pip, this was the low. Look, and 24.10 here. All of those candles were qualified for the trade, because everything which we do, basically we want to do with 5 to 10 pip buffer, but then the price was hit and shoot it down. Look, bang, 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 bang. It made a huge move, nice move, I like it. Nice move. That was euro. Cable. This was the trade of the week. 59.50, stop loss 59.80. The trade which had almost no drawdown. Almost, well, 44 was hit. it dropped, then again all of these candles, this candle, this candle, this, all of these candles were qualified for entry. So this was the first chance to sell. The second chance to sell, let me see, no, this was not, this one, yeah, this one, this one, this one. So all of these candles, which were basically 10 pips from 59.50, were qualified. And this was the best because it was the first 59.44. But look, even though if you traded this setup here, this is pretty much, guys, naked. This is how I call it. I use the term not foolproof, but something like that. This is so easily traded. Easy trade. This was easy trade. Pretty much easy trade. Look, 1, 2, 3, 4 tops, quadruple top, and then bang, look how big of a drop it was. 1, 2, 3, 4, 5, look. Even though if this candle was, yeah, it was 40, okay. This candle was not 40, it was 35, but then same, this was the zone after my analysis. You could have sold it here, look, so many rejections. And look how where the price went. Then, yeah, sorry, we had another good trade, Aussie. I was suggesting you to buy it, 86.00, 15 pip trailing stop, 86.50. So 86.00 was the entry, well, around 86.00, and the price perfectly came to 86.00, but yet again, look, it shooted up, hitting our target. Then we had dollar CAD, high volatility setup, sell 98.35, and look, this was the time of our webinar, and look, one chance to sell it, 2, 3, 4 chance to sell it, even here. So first 5 candles were good. 1, 2, 3, 4 chances to sell this pair, and look where it went. 40 pips to the downside. So this one was also a good trade. And 2 losses. Dollar CAD loss. This was the time of the webinar. The price came to an entry and hit stop loss. Dollar, well, you see, later it was, look where it went. Look where it went. Guys, 70 pips in a profit. But first, of course, I also think that this is also was manipulation, and I will write about this in the blog, because this is not normal. Look, and where it went. We can say, look, 9 o'clock time, 8 o'clock, 8 o'clock. What a big volatility at 8 o'clock. Very strange, really, very strange. I don't know, very strange. And of course, later it dropped. But we had a loss here, and loss on dollar yen. I cannot say this was manipulated. This was a trade which wasn't successful. But, well, dollar yen pretty much strong. I won't deal with it now. I will deal with other pairs. So, total of 175 pip pool from the last recap. Now let's get moving to this week's setups. Euro dollar is in uptrend if we watch intraday chart, but I need to say that with the reserve. Look, this is basically a range, but this is what I'm considering a potentially good trade. Here we will draw Fibonacci levels. Okay. Now, I'm not saying that this might be also a good time for entry, this zone here, because the price is really, it's making a wick, now it's making a potential railway pattern, and it's jumping of 61.8. Not 61.8, sorry, it's basically close to 78.6, in between 61.8 and 78.6. If you open 4-hour time frame, we can see basically that the price broke this high here, and also this height was broken, 25.77, and this candle was, yeah, basically no, it wasn't. I thought it was broken. So this is double top. So this is effectively double top. But look at this price action. Look, what does it tell you? It basically looks like it has a double top here, but look, it has an ascending trend line down. So basically I can say this is bullish price action. For me this looks bullish on euro dollar, really. Especially because this height was broken, and then look, basically the price is making higher highs. This was a low, look at this range here. So this was low and this was basically a high. We can say this was a range also. We didn't have any trading particular here. But then the price, this candle is important. This is bullish candle. This is volatility candle. Look, it made basically a new high, and this candle made a new high. So we need to count this low approximately as a higher low if it doesn't go below this level. So what I'm trying to say is we might still have some long positions, and this is the zone where I'm counting around 24.40 with stop loss at 24.10. Target is 26. Sell around 26.10, target 20, stop loss 26 for target 24.40. But guys, please do this. I'm not sure if you should consider trading this trade to full potential, because tomorrow we will have German's EU economic sentiment. It will be due in at 11 Central European time. This is my time zone, and that is GMT +1. This particular news release can break all of the levels in between, and that is why I'm not sure whether I would like to trade euro dollar. But if you made a position today on long on euro dollar, well, what can I say? Try to stay in the trade and wait to see whether it will make you some profit, and put a trailing stop. I just don't like to see this kind of price action, and it can be a little bit confusing. Now if we go with a standard technical analysis, we can also spot this triangle has been broken, guys. Look. Now this is inner trend line, and the price perfectly found the confluence at 44, 78.6. It's almost, yeah, it's very close, 10 pips buffer in here. So this is a confluence for long entries. But one thing what I don't like is that news release tomorrow, because if numbers are good, then we can jump to 26.10. We can even jump to, well, I can say this is final target, but I can say that we will break 25 again. But look, now it's again this 4-hour candle. Let's switch to 1 hour. Look, this is a confluence zone, guys. Pretty much a confluence zone. Look. And here. So what is bugging me is if the price will break here and close inside this triangle, it will be a range again. So that is what I wouldn't like to see. I wouldn't like to see, and I would like to see jumping from this zone to the upside. Okay, so that is up to you if you want to take, but if you make an entry, do with a very, very low risk entry. Okay, very low risk entry, guys. 0.3 risk. The question is, how can I download Camarilla? Camarilla indicator can be downloaded free from the internet, but that is indicator, that is not my method. Camarilla is just an indicator which I use, and Camarilla MACD is a proprietary method. Market plan for GBP dollar. GBP dollar is in downtrend with a possible correction. The first thing where I would look to sell is 57.40, 30 pips stop loss, 56.50 is the target. Buy trade should kick in 56.25, 15 pip trailing stock, and 57.40, but this is not a swing, scalp swing. This can be counter trend swing, full swing. So this can be treated as counter trend full swing. I will show you why, okay? This is pound. Now look at this, down, and look at this, up. So what does it tell? What does it tell you? It tells you that pound is basically having a higher low here. Look, and this is a high compared to this. And this was double top, which was broken. So I would also look to buy this pair, but only if it comes to 56.25. Because we can see some nice rejections here. Okay, and if it comes to this level, I will be looking to buy it. Sell 57.40. Let's make it like this. And let's point it out. Here, guys, this is where I want to sell it. 57.40. Look the price action, because if it breaks above this region, it will collect some stops, okay? But it shouldn't break this region, 70 region. If it comes to this 50 retracement, then it can shoot up. So this is where we want to sell, because this trend line will still be good. It will be adjusted. Look, we have a trend line here. If it makes it to this level, it will be adjusted, and I want to see this level, 57.40. Okay, look, it's very close. The price can basically, if very close. Sorry, I was trying to say it is very close to buy entry, of course. But if it comes here first at this place, of course I would be looking to sell it. We have a trend line, and we would adjust this trend line if it hits. And we still have breakout continuation here. And this shouldn't come to our stop loss, because if it hits our stop loss, then there is a possible deeper correction on GBP dollar. So this is where we should try to find our chance to sell. And our chance to buy. 56.25 buy, 57.40 sell. Next slide is Aussie. Basically, Aussie is still. Well, let me see Aussie. I think I was trying to make another analysis. I will do that now because I remember. Now we should buy Aussie. I will change the slide. This was the old slide. We should buy Aussie. The only thing where I would be looking to buy, guys, is obviously here. Look, the confluence, 886. So 86.65 is buy entry. Now it's, sorry, it's in uptrend. I'm taking intraday charts. So we go first with position buy around 86.65. Stop loss 86.35. And our final target would be 87.20. Look at the confluence here. Look at the historical buyers here. So what do you think most logical is? If the price hits this zone, 88.6 deep retracement, we have previous buyers here, and I think there are still fresh buyers here. I will make a pending order, 86.65. If it hits, great. I think that we will be in profits. Just look at this chart and spot the confluence, guys. Spot the confluence. Look inner trend line also. Look at the ascending trend line. Inner trend line, ascending trend line. If this place is hit, this zone, Of course, I am hoping that it will go up. It's logical that it should go up. Look at the confluence. Look. So Aussie is buy trade. 86.65, 86.35, 87.20 is the target for Aussie. Now, next slide will be, okay, next slide is Euro Swissy. Well, guys, you probably know about gold referendum in Switzerland, and many of cantons, which are basically making up for a whole land, are against selling off gold. So basically, you can read. Just type it, because we are doing technical analysis now. Just type it on your Google. Type gold referendum, Euro Swiss or something, whatever you want, Euro Swiss referendum. There will be many articles about it, but the thing is, SNB President Jordan recently said that SNB would defend 0.2000 floor, so 0.20 floor, by every possible arsenal. So SNB should be ready to defend 1.20 floor, and the price is exactly very close to 120. So I already am in. I will hold this trade no matter how long, because this should be when fundamentals are aligned with technicals. And I still hope that this trade can give me 200 or 300 pips. Weekly chart, guys. Weekly chart, guys. This floor should be defended, and SNB has sworn to defend it. Whatever the outcome will be, we are in a low risk trade here. And this trade, I will write it down. This trade should be open after 30th of November. If it doesn't hit stop loss. If it doesn't hit stop loss. You will pay a little bit for a swap. And there is nothing, really. The swap is really low. Overnight rate, swap rate is low for Euro Swissy. Okay? Comment. Justinas is saying they could collect stop loss here very well. Yes. If they defend it, it shouldn't be lower. Look. Look at the price. This floor should be defended, and I think it is defended. Look. Okay, look. So what I'm saying, this is a very low risk trade. Very low risk trade. Your stop loss should be at 90.90. So guys, it's up to you. This is low risk. I mean, I don't know. If I lose, then well, what can I say? It's not a big risk trade. It's logical trade. Whatever you want to do, pay attention to weekly chart. Look at the prices here. It is defended, and it should be defended, because that is the policy of SNB, a huge bank. SNB, Swiss National Bank, Central Bank of Switzerland. Look. Now the profit is around 22.00. So let's see. First target is 21.50. But let's see what we will get. I'm leaving this trade because I'm not sure that something will happen before the referendum. So we have still 10 more days to go, right? 15 more days. GBPN is the final slide for today. I would looking to sell at 182.55 with stop loss at 182.90 with profit 181.70. This is when I say sometimes I use 35 pip stops. So this is because GBPN, look, GBPN, I will be looking to sell at this zone, 61.8. We also have a trend line here. So this zone here, sell, and this is where stop should be. So let's see if we get the price. I would be really glad if we get a price going. That means that we will be very good in our trade. So if this rejects here, we would probably see a great sell. So guys, you can ask me now whatever you want concerning trading. I will roll these slides again for all of you to see. And let's see, I don't do dollar yen, guys. I can look if you want, but dollar yen, euro New Zealand, not interesting to me at the moment. Let's see euro Swissy, let's see AUD CAD, and let's put euro New Zealand here, euro New Zealand here. This is euro New Zealand. Yeah, of course, this what you saw here, this is GBP. GBP, for all of you who like moving averages, in January I will be making a special webinar about GBP trading. So all of you who want to trade GBP, sign in for that GBP webinar. It should be scheduled in January. Okay, GBP. I'm testing it currently. So where should I? AUD yen, dollar yen, and any comments about Draghi's speech? Yeah, Draghi was pretty much dovish. That is why euro dollar fell from 25.70 to 25 cents to 24.40. Pretty much dovish and pretty much bad results from eurozone. But tomorrow, this will be another day to trade. So tomorrow, obviously, market will be waiting for German EU sentiment. So we will see what we can have from euro dollar. But please, if you're trading euro dollar now, use a low risk. Okay. Douglas requested for band indicator, and you said I should send you a mail. Yeah, Douglas, didn't you receive my band indicator? I'm sure. Let me check my email. Please, guys, stand a little bit more. I just need to check it, because I was sure that I sent, for all of you who wanted those indicators, I did send you. Let me check it. Douglas is complaining that I didn't send any indicator. I will look to it now. Please be patient. Abu Douglas, yeah, this is your email. Yeah, I sent it, Douglas. I sent it, and just I will make a quick Douglas, this is indicator for drawing channels. Keikeneshi, Kamadil, okay, what sort of indicators you want? I send you indicators for drawing channels. You want band indicators, Douglas. Here, I will send it immediately. If you want band indicator, let me just send you the indicator. I will do that instantly, because I sent you, well, it says channel indicator. Yeah, okay. If you want bands indicator, I will do that immediately. 1 second. QL indicators, bands here, band indicator. Okay, sent, Douglas. I just sent you the indicators, so good. Okay, now let's see Euro New Zealand. Euro New Zealand, it's in a bearish mode, and the thing is, this is pretty much straightforward. You need to draw a trend line. This is trend line now, and basically this gap is still open. If you see, if you can, okay, this gap. So now insert Fibonacci retracement here from this point to this point. What do you see here? 78.6. This is the zone. I would personally be waiting for a gap close, because we have here we have basically a level where the gap is open, and also 78.6. Also, this is very close to this trend line. So if you take a short trade, I would first close the gap, then immediately enter short. If you want to trade Euro New Zealand, okay? Close of the gap, then bang. Let's see it more to the downside. This is what I would like to see, okay? On Euro New Zealand. So gap close first. Dollar yen, then ODN. Let's see dollar yen. Oh, where is this? So where is dollar yen? Dollar yen, dollar yen, dollar yen. Here, dollar yen. Dollar yen is effectively buy. The first jump where we had a buy after the breakout was 116.08. But later we see also that it formed basically, look, so this was stop grabber. This is called stop grabber. And when price is breaking a trend line, all of those weaker stops are collected. So this was stop grabber. This should be going up. And now, if you are already in the trade, I suggest that you leave the trade. If you're not in the trade, then 116 point. Oh well. Now I need to use this one. Okay. Yeah, it's pretty much obvious. Now it's hard to make any positions in this pair. Look, I wouldn't make any positions at the moment. But this should go up. This should go more up. Okay? But it's very close to resistance. And you see a double rejection. So this is resistance now. So basically it's in uptrend and it's still facing resistance. And I wouldn't trade this dollar yen at the moment. Really, we have trend lines. We have also deeper retracement. Then this was the chance for you to go long. This was the second chance. This was the third chance. Look at the confluence, rejections. These are all rejections. These are pin bars here and pin bar here. So this should go up, but it's very close to resistance. So I wouldn't go with that kind of trading, you know. Yeah. Okay, too many questions. Justinas, I will tell you, just let me finish with these slides, and then I will tell you where to read my, where to look at for my webinars, okay? 170 is the target. Yes, I agree with this. For this move, 117 is the target. I had a question about dollar yen and dollar Swissy. ODN and dollar Swissy. ODN, this is ODN. This is basically uptrend, and this uptrend basically, again, look at this. You can go with long entry if it comes close here, but be aware that it's already playing out. So this entry is already playing out. If you take a look at this swing here, you can see that basically price is jumping on 78.6. So this is where you should place an entry, and the target should be a gap here, gap close. Yeah, it was already closed, but still it should target the gap, because obviously there were buyers. So I think that ODN should test these buyers here. So this should be your target, first target, this one. So for ODN, okay, dollar Swissy. Now dollar Swissy, let's see. So dollar yen is playing out here, and this is the level. Dollar Swissy. Yeah, I was also thinking about dollar yen, but I missed this one. But this was definitely good. Then dollar Swissy, let me see, dollar Swiss. I will tell you what I would do with dollar Swissy. Let's take intraday. I would go with 26.20 to 25 with buying dollar Swissy. So first I would look if this dollar Swissy drops. If the price drops to 26.20, 25, I would buy it. Because we have a breakout. This is trigger happy. This is not retest. Retest will be retest. So this is breakout, retest, continuation trade. But first, dollar Swissy needs to drop to this level. I can put this on the slide. Sorry. This looks interesting. I'm talking from intraday perspective. Just for your reference, this is breakout retest trade buy. This is the level 0.2620 to 25. So let's say 0.20. Stop is 0. And target is this high here. This is now, I don't have my Camarilla MACD template here, but I also look at, I took a look for this pair. Yeah, 20. And I know what we should do. This is for dollar Swissy. Final slide, dollar Swissy. This was trigger happy trade. Now we wait for a retest. And if this level breaks, continuation is to this zone. So let's see if we get 26.20 to 25 buy trade. This is what I'm looking for. Now I will go through slides, and this is what I was looking for. Let me just pause the screen for a brief moment, and I will show you Forex Street. Okay, this is my page on Forex Street, and these are the webinars which have been recorded. So August 5th. High volatility trading. High volatility trading. This is the webinar about high volatility trading. Okay? So you can watch the webinar. I will go through these slides again. Euro dollar. Okay? Please watch out. Watch out for Zuzek economic sentiment. Cable. And please, again, guys, just type Nenad Kerkez, my name, surname, Forex Street. And then this will come up. So just type on Google, Forex Street, Nenad Kerkez. This will be the first, okay? Click on this link and you will see high volatility trading. This is the webinar you should look for. Mike, thanks Steve from Mike. Yeah, thank you Calderon, I know that. Forex Factory, my friend from Forex Factory. Have a great week. I must go to the gym. Have a nice gymming. Mike, yeah, to the gym. I do that three times per week. So, of course, have a great time. Go and do a little bit of exercise. And I'm really glad to see you here. This is my friend from USA. He's also a good trader. Mike, his name is Calderon, and you can find him also on Forex Factory. Thank you, Mike. Try to grow some muscles like you. Thank you. Thank you, Mike. So, yeah, have a great time. So this is GBP dollar. It's in downtrend. We have possible correction here. Sell it 57.40, 30 pip of a stop loss. Target is 56.50. Buy should come pretty much soon if we get a price a little bit lower, 26, 25, 50 pip trailing stop scalp, but this can be target. I don't know, this is treated as a scalp, but I already taught you how to basically turn a scalp swing into intraday, so use that knowledge. This is AUD 86.65, 86.35, 87.20. This is Euro Swissie 2010 90, 1990 22.00, and GBP 82 800, sorry, 182.55, 182.90, 181.70. Yeah. This is a good notice from Law. Law is saying, also guys, yeah, pay attention to this. Talking about Aussie, Reserve Bank of Australia wants cheaper audio, yes. And tomorrow, Glenn Stevens will speak as well as monetary policy meeting minutes will take place. What I would, yeah, exactly. We still have some time for Audi, okay, 86.65. But it will be, let me just check, guys. Let me see something. Let me just see, please, for a minute, and then I will tell you what I will do. Thank you for spotting that out. This is what we'll be looking for. Just let me, okay. Okay, here, Forex Factory, calendar. Yeah, monetary policy meeting minutes. Well, yeah, look at this. It takes at 1:30. So, if you do the trade, do it as a low risk. I will state this again here. Okay, low risk due to impending meeting minutes. I would do the trade, really, but only as a low risk trade, okay? So for example, if your normal risk is 0.5, try to do 0.25 because we have potential of 65 pips, okay? 55 pips. Yeah, you never know. It's, guys, you never know what can happen. From a technical standpoint, this can be it. But if you want to skip this trade, yeah, technically, look, technically, it's good to go long here. And even if you want your risk to be lower, you can place your stop loss 5 pips below 40, 43. So basically you will be trading with 20 pips stop loss. So if you want to take this trade, you can try. If the price gets here and try and jumps initially, then use your trailing stop. But do not trade this if you don't have, guys, don't trade this if you basically do not want to take low risk trade. So only low risk trade. Only low risk trade. So pay attention to that. Okay. Technically it looks good to me, really. It really looks good to me, but you know, it can be risky because of meeting minutes. So use, I will yeah, low risk due to impending. So you can also place your stop just a little bit this candle, below this candle. So effectively making your risk 40. So I will do it like this, 40. Yeah, this should be it. Not 35, sorry. So 86.35. Well, it's not that big, 25, let's say, pips. Just because of impending news. So I would personally maybe if I would trade the news, I would monitor how it behaves. And if it hits the level and start going in my direction, I would use trailing stop. But look, it still has the room to drop. So we will see. And the speech of a governor will be at 9:25. So you have 8 hours. I don't think that the price will make a huge movement here. Maybe. Meeting minutes are always risky. But look when governor will speak. 8 hours after. So it's up to you, but use low risk. So this is everything I had for you. Let's see one more. Yeah, we have, sorry, Euro Swissy. Then GBPN. And finally dollar Swissy. And we are now above our time. So guys, thank you for listening to me. I will do updates. If something happens, I will post new analysis tomorrow for other pairs. And I wish you, of course, a great and successful week. And I just hope that this week will be as good as week before, where we had great trades on GBP, Aussie and Euro. Thank you. Thank you guys. Talk to you very soon. Cheers.